these traders are morons. Hi, it's Charlie giving you Thursday's video. Who do I mean? Well, it's the masses out there. The masses of traders or wannabe traders around the world who, for starters, have false expectations. I won't type expectate or write expectations out, but they have false expectations of what they think is achievable in trading. And I don't just mean about the money. I mean about the timeline, how long it takes to become a competent trader, and so their time horizon is way too short. Plus a whole plethora of other things like what they think is going to make them money in the market, like just the latest strategy or whatever it may be, form of technical analysis, whatever it is. And it's such a shame because those are the very same traders who are going to blow up their trading accounts, because many of those types of traders don't want to use stops because they say, well, why would you use stop losses? Because if I use a stop loss, I'm going to get stopped out. And literally, I've heard traders use that language before. Yes, the whole point of having a stop loss. But what it does guarantee is you don't blow an account. People don't use stop losses. If they don't use stops, blow up accounts. Because 90% of them will blow up accounts because they don't have the mental discipline to cut the trades. And at some point, they won't cut a trade, even if they've gone on for a year and said, oh no, I sort of got away with it, Charlie. I was in trades and oh God, they went underwater and I was a bit heavily underwater, but they ended up coming back. And that reinforces a bad habit. And then at some point, they'll be in a trade where it doesn't come back, and then that's when they blow up. So they have this desire to be right as much as possible, so keep chasing the holy grail of trading, trying to jump from one thing to another to try and find that magical strategy which is going to mean that they're right 100% of the time or 90% of the time, whatever, thinking that that is what's going to make them successful. Well, let me give some ideas as to what I think and what I know is what makes traders successful. One is using stop losses for starters. So all the things that the masses out there don't do. And all those masses who end up quitting trading because they lost money, and they're the very same people who will tell other friends, oh yeah, don't get into trading because I just lost money at it. No, you lost money at it because you did it wrong. So, for one, use stop losses. Two, hold on to your winners. Hold on to the winners. Don't grab profits too quickly. Hold on to your winners. I've been in a trade right now on this euro dollar from about down here, somewhere down in this zone, all the way down in that zone. And I've had to sit patiently through all of this bit of chop until this market has started to come. That's it. You hold on. If it's not come down to your stop loss, you hold on. Don't allow the market, if you've got a plan, whatever your plan and where your take profit might be, if you've got a plan, stay with your plan. Don't allow the market to bore you out. It doesn't matter whether it's a daily chart like this or this was a 5-minute chart. Stick with your winners. Hold on. Most traders don't do that. They get into a bit of profit and then want to grab it because they'll use language like, well, you can't go broke banking a profit, Charlie. Well, fun enough, you can, because if you keep banking your profits too soon, they're not going to pay for the losing trades. So hold on to the winners, and therefore look for positive risk to reward outcomes. So look for positive risk to reward outcomes. Don't fall for the holy grail. So there is no holy grail. I can't write it. Let's put it in here. Holy grail of trading strategies. I'm really sorry, but there is no holy grail of trading strategies. I've been trading for 26 years now. I'm a professional money manager, regulated here in the UK as a money manager. I have for 4 funds now. I'm on a committee. I've just been invited onto a committee of fund managers to have a quarterly round table to give my thoughts and views on the currency markets as well. I can pretty much back up what I do. And one thing that I do know, having trained traders over the decades as well, over the last 2 decades, is that there is no holy grail. There's some strategies which are pretty good, but none of them are a holy grail. There is no holy grail method. There is no certain style that I keep people come up to me and say, "Oh, Charlie, what about, Fibonacci? What about Elliott wave? What about Gann theory?" You can chuck them all in the bin because they are only as good as the user that is using them. So they aren't some magic theory on the market that breaks it all down. I'm sorry to to shatter your dreams when it comes to what any of those sorts of approaches and more, all these other things I hear about. The real holy grail is in you and your mindset. And I say this over and over again, because if you can't get on top of your mindset, it doesn't matter how good your trading strategy is, it won't serve you well anyway, because you'll start to second guess when you should be buying, selling, banking profits, all of that stuff. And you'll get fragile when you have a series of losing trades, or you'll get too confident when you've had too many winning trades as well. So there are no holy grails. These are my pieces of advice here. Trading should be boring. Trading should not be exciting. If you get excited by the markets, then that tells us that your adrenaline is pumping. If you want pumping adrenaline, go and do something else. Because if you get excited by the markets, don't get me wrong, I adore the markets. I live and breathe the markets. But overall, trading itself should be boring. You're buying and selling, support, resistance, all that stuff. And so if you're getting excited by trading or craving excitement, like, "Oh, Charlie, I want to be trading 10 times a day." You're going to chuck you in the bin, because you're going to become one of those statistics who just loses money. Trading for a lot of the time should be boring, i.e., sitting on trades, waiting for them to play themselves out, sitting on your hands. That's where you make the money, is having patience. Patience. And that comes to trade frequency as well. Whether you are a short-term trader, an intraday trader, let's say, and I would encourage anyone who's been trading for less than a year not to day trade, because the market will have you. You will blow up an account or lose a considerable amount of your capital. I can guarantee that to you. Intraday trading is for experienced traders, not for beginners. And anyone who's been trading up to a year, even a bit over that, is still an inexperienced trader. So have patience on your trades. But even if it is a short-term trade off of an hourly time frame, and it doesn't have to be off of a daily chart or higher time frames, have the patience to see your trades through. Coming back to my point here about holding on to trades. So patience is so important. Patience, waiting for your setups to come along and the analysis. And there are times when the markets just aren't conducive to your style, and so have the patience to sit back and know when not to trade is just as important as knowing when to execute the next trade. And the last, I guess, all intertwined with patience is don't overtrade. And people that overtrade are so often, this is what beginners do. You don't want to be like the masses out there around the world who overtrade, because they chase what? Excitement. And it comes back to this point on boring, comes on to this point on having patience. If you are overtrading, i.e. if you're looking for lots and lots of trades, it's more likely you're going to be losing money. Experienced traders can do that. But really, an experienced trader is someone who's realistically been trading 5 years plus. Anyone under 5 years, I'm sorry to burst your bubble, but you're still building your experience. And especially those people within the first 2 years, they're just babies in trading terms. So If you crave excitement and lots to do in your trading, you're probably doing it wrong. So, my main advice is risk management, using stop losses, look for good positive risk reward opportunities, hold on to that, and therefore holding on to winning trades. There are no holy grails. Trading should be a bit boring at times, where even when you're in a trade, sitting on your hands, waiting for it to play out. You're not going to make 1,000% a year. I'm sorry to burst your bubble. That's not what goes on in the markets with real traders. Have realistic expectations from your trading, not £1,000% a year. All of this stuff is how the masses think out there. And why do we always say, and why do we know for a fact that 90% probably plus of people that get into trading will end up quitting and failing at it? Because they think in those ways, all the things that I've just been talking about. So ask yourself the question, how am I trading? What am I doing? When a market goes up, am I looking for it to come back down? When a market comes down, am I just looking for it to go up? Because that's what the masses are doing out there. Don't get me wrong, there are technical reasons to catch highs and lows at certain times. But not if you're just thinking a market's gone up a bit, I think it should come down. That's not a good enough reason. So if you want to trade professionally, do it professionally. If you want to be like them, if you're going to have a mindset like the masses, guess what you're going to get? There, my rant is over for this week. I shall see you on Saturday. Comments and feedback, always welcome as always. As always. Thanks for now.